Elon Musk just pulled off an $800 billion financial move that shook Silicon Valley. And it wasn't Tesla, it was SpaceX. While Sam Altman's OpenAI was celebrating a record valuation, Musk quietly set up a counterpunch that could become the biggest IPO in history. SpaceX is now on a path that could redefine who really controls the future of tech, AI, and global markets. And today, we are breaking down exactly how this happened, why it matters, and what it means for investors watching billionaire portfolios. Elon Musk's SpaceX just climbed to an $800 billion valuation, according to the latest insider share sale, beating out rivals and potentially reclaiming its place as the world's most valuable private tech company. This means one private company, not even public yet, is worth more than most blue-chip giants on Wall Street. This valuation leap didn't come from one single funding round. It's the cumulative result of years of innovation, contracts, Starlink's rapid growth, and investor confidence. And the excitement doesn't stop there. Musk is now actively preparing SpaceX for an IPO, potentially in 2026, that could dwarf every other public offering in history. Early reports suggest the company is targeting a valuation up to $1.5 trillion when it finally lists its shares. To put that into context, if SpaceX hits that valuation, it would rival the total market caps of major tech giants like Amazon and Google at maturity. And it would absolutely redefine how we think about investing in frontier tech. Wall Street insiders are even talking about it as the largest IPO ever, potentially raising more than $30 billion in fresh capital. This could be the defining financial event of 2026, not just for Musk, but for every investor with equity markets on their watch list. Not all billion-dollar valuations are created equal. Most tech unicorns are priced on future software adoption, advertising growth, or user metrics that can disappear overnight. SpaceX is different because its valuation is anchored to hard infrastructure and government-backed demand. SpaceX already holds long-term contracts with NASA, the U.S. Department of Defense, and international space agencies. These aren't speculative customers. They're some of the most reliable payers on the planet. On top of that, SpaceX owns physical assets that competitors can't easily replicate: launch facilities, reusable rocket technology, satellite fleets, and a vertically integrated supply chain. This creates something rare in modern markets: a company that combines venture-style growth, government-grade revenue stability, infrastructure-level barriers to entry. That's why investors are willing to assign SpaceX a valuation normally reserved for dominant public tech giants, even before an IPO. In billionaire portfolio terms, this isn't a growth bet alone. It's a strategic monopoly-style asset. There's more story here than just SpaceX's valuation. It's also about competition among the world's most innovative billionaires. Elon Musk and Sam Altman, once collaborators on AI, are now in a very public rivalry over who controls the most valuable private tech names on the planet. OpenAI, led by Altman, soared to a $500 billion valuation earlier this year. But Musk's SpaceX is now planning a share sale that would push its valuation up to $800 billion, potentially taking that crown back. This rivalry highlights a new era where tech visionaries don't just compete in products. They compete in wealth, market cap, and investor perception. Most people still think SpaceX makes money by launching rockets. That's outdated thinking. The real long-term engine here is Starlink. Starlink already operates thousands of satellites, providing high-speed internet across remote regions, war zones, ships, airlines, and governments. Unlike rockets, Starlink is a recurring revenue business: subscriptions, contracts, and long-term users. This is critical for investors because recurring revenue is what Wall Street values the most. Some analysts believe Starlink alone could eventually be worth hundreds of billions of dollars, even if SpaceX never launches another revolutionary rocket. That's why Musk has hinted that Starlink could be spun off or partially listed separately in the future. So when investors talk about a SpaceX IPO, they're not just pricing rockets. They're pricing global infrastructure, data networks, and a private alternative to terrestrial telecom giants. This is exactly how billionaire portfolios compound. They don't bet on products, they bet on platforms. Here's the part most retail investors miss. By the time SpaceX goes public, the biggest gains may already be locked in. Companies like Alphabet, Google's parent, invested early. And because of SpaceX's rising valuation, Alphabet is now sitting on a massive, unrealized accounting windfall. This means SpaceX's growth is already boosting the balance sheets of public companies before you ever get access to SpaceX shares. This is a classic billionaire move. Invest early in private markets. Let valuation grow quietly. Benefit indirectly through public exposure. Smart investors track second-order effects. Which public companies own private winners? Which suppliers, partners, or data users benefit? Which ETFs or funds gain exposure without owning the stock directly? This is how institutional money plays the game. And it's exactly how billionaire portfolios quietly grow long before headlines hit. So what does this mean if and when SpaceX finally goes public? 1. Retail investors may finally get access to shares of a company worth nearly twice Tesla's current market cap. 2. Experts are already predicting stock prices could reach significant levels at IPO, with forecasts ranging between a few hundred to over $1,000 per share depending on valuation. 3. Early institutional holders like Alphabet, Google's parent company, could see massive windfalls, potentially over $100 billion on their original investments if SpaceX hits the $1.5 trillion mark. On top of that, SpaceX isn't just making rockets, it's building Starlink broadband, planning AI data centers in space, and even eyeing lunar and Martian missions. These revenue streams could make it far more than a launch service provider. Of course, all that potential comes with risk. SpaceX's long-term goals, like colonizing Mars or building AI data centers in space, are visionary, but they require massive future spending. Analysts caution that ambitious projects can delay profit realization, and heavy R&D costs could spook short-term investors. That's why some see the SpaceX IPO as a high-risk, high-reward trade. Massive upside if innovation pays off, significant volatility, while those bets play out. This is exactly the type of move real billionaire portfolios are made of. Vision, risk tolerance, and timing. So what do you think? Will SpaceX's IPO reshape investing in tech or become the biggest bet of the decade? Drop your thoughts in the comments below. And if you learned something today, smash that like button. Subscribe for more billionaire strategies, big market moves, and portfolio insights from the wealthiest players in the game. Until next time, keep building elite financial knowledge.